Hey everyone, welcome back to the channel. Today, we're retackling a topic that separates the consistently profitable traders from those who just get lucky now and then. We're talking about the trade journal. I know, it sounds like homework, but trust me, this one simple habit can completely transform your trading results. So, why is keeping a trade journal so crucial? Think of it this way, without a journal, you're basically flying blind. You might remember your big wins and your painful losses, but you're missing the most important part, the why. Why did that trade work? Why did the other one fail? Was it your strategy, your timing, your emotions? A trade journal is your personal data-driven coach. By logging every trade, your entry and exit points, the reason for taking the trade, your market analysis, and even how you were feeling at the time, you start to see patterns. You'll discover which setups you're best at, what times of day you perform well, and, most importantly, you'll identify your recurring mistakes. Maybe you're always cutting your winners too short out of fear, or revenge trading after a loss. Your journal will show you this in black and white. Let's walk through a specific example. Imagine you're keeping a journal. A single entry might look something like this. Short, your USD at 1.0850. My reason for entering was a clear bearish engulfing candle forming at a known resistance level. I set my stop loss at 1.0880, just above the resistance, and my profit target at 1.0790, near the next support. The result was that I was stopped out. My note for review is, I entered the trade impulsively, before the bearish candle had fully closed for confirmation. This is a recurring issue. Now, imagine you've been making entries like that for a few weeks. During your weekly review, you might notice a glaring pattern. Looking back, I've lost money on 8 out of my last 10 trades that I placed on a Friday afternoon. It seems my focus and decision-making are significantly worse at the end of the week. This is a powerful, specific, and actionable insight that you would almost certainly miss without the hard data from your journal. You can now make a new rule. No trading on Friday afternoons. It's not just about recording what you did, it's about reviewing it. At the end of each week, take some time to go through your journal. This review process is where the real learning happens. It's how you turn raw data into actionable insights. This process transforms how you view losses. Instead of being a source of frustration, a loss becomes a valuable piece of data. Your journal allows you to perform a post-mortem analysis. You can ask, was my initial analysis correct? Did I follow my trading plan? Was I feeling anxious or greedy? Maybe you realize, okay, I lost that trade because I ignored my own rule about waiting for a candle to close. I was impatient. That's how a loss becomes a concrete lesson, not just a random event. You learn to be more patient on the next trade. You stop making the same costly errors over and over again. Instead, you start refining your strategy, improving your discipline, and building the kind of consistency that leads to long-term profitability. Your trading journal is your roadmap to success. It holds you accountable, sharpens your skills, and helps you master the psychological side of trading. If you're serious about becoming a profitable trader, stop guessing and start journaling. It's the best investment you can make in your trading career. So, to be very clear, make sure every journal entry includes these core elements. First, the why, your specific reason for entering the trade. Second, your goal, the profit target you're aiming for. And third, your stop loss level, the point at which you've decided the trade is invalid. Recording these details is non-negotiable. It's the only way to get a clear picture of which strategies are actually successful for you over time. Thanks for watching. If you found this helpful, hit that like button and subscribe for more trading tips. See you in the next video.